Good morning. I'm Peter Towers, Managing Director of ESS BIZTOOLS. Welcome to this webinar relating to the advisory intro package, Buying a Business. I hope you're having a wonderful day. Let's look at some of the aspects of how you would go about advising a client to buy a business, because it's a very important decision, isn't it? And obviously in the current business conditions, you could say they are very game wanting to go into buying a business, but people are still doing it. And they deserve to receive 100% competent advisory services to help them get started on this journey of running a business. So let's look at some of the issues. What needs to be done? They need to undertake due diligence review. Does the business suit the operator lifestyle or their family's lifestyle? What key staff from the vendor will be retained? Have you considered this in your advice to your clients? Have they made contact with their suppliers and entered into contracts with them for the ongoing supply of services, and in particular, at what price and on what payment terms? You might recall that we've written a number of articles referring to the MYOB CEO's Paul Robson's article in the Financial Review about 14 months ago, in which he highlighted that the survey of 1,000 MYOB subscribers had indicated that a significant number of those people had assumed that they would automatically be granted 30-day payment terms by suppliers. And they got a rude shock when they placed their first order and were asked to immediately pay for it. And this may well have continued on for 6 months or even longer. So this contact and then the contracts with suppliers is very important. Communications with customers needs to be thought through, needs to be a condition of the purchase contract to buy the business, that the vendor will assist in the introduction of your client to their customers. Knowledge of the business by the team members. Needs to be an adequate assessment made to try to determine just how important the individual team members are to the new business operator. Do they have all the skills, or do they only have 40 or 50% of the skills on the overall basis of running this business? An important question is to inquire what the vendor's family or close family members who have been involved in this business are going to do once the sales contract is finalised. The reason I raise this is I have observed and been involved in some of the dispute that has arisen where a business has been sold. There have been adult children working in that business, children of the vendor, and within a very short period of time after the sale of the parents' business, one or two of the children have started their own business in a fairly close proximity to where the original business was. And they've gone out and promoted to those former customers. Those children were probably not involved in the original business, therefore there was no restrictions placed on them. And it can cause a lot of arguments. So it's best to try to find that out first. Does your client understand fiscal management? This was the key issue that Paul Robson, MYOB CEO, raised in the article in the Financial Review, February 2024, in which he indicated that a significant number of the 1,000 firms that MYOB surveyed really didn't understand debtors management, had no idea of the calculation of debtors days outstanding. assumed that they had to offer credit sales terms to anyone that asked for them, had no credit management philosophies or policies implemented, such as stamping the due date for payment on the tax invoice, promptly preparing statements if they were still preparing statements at the end of a month and getting them out, making sure queries were answered promptly because the customers won't pay under those queries that are answered. And my response to the problems with fiscal management on the debtors side is that we have a debtors management system pro forma included in the ESS BIZTOOLS product packages that you can quite simply modify to suit your client's requirements. Some of your clients may have a internal system of color codes of various documents. I found this out one day when I was a very young accountant, because no one knew where the cash receipts book was until someone said, "You're not looking for the green book, are you?" And because that company had color coded everything. We were doing an audit, and that was a very big company, Australia-wide. Some of your clients may have done that, and the team within the client's team employee, they just become accustomed to calling these key documents by their code names: yellow book, green book, red book, whatever. Fiscal management also extended to what I've already raised, and that was the dealings with suppliers. Suppliers are very, very important for the vast majority of our clients. And someone buying a business needs to have made contact with them, because there could have been all sorts of sweetheart arrangements that have been entered into with the vendor. The vendor may have been one of the original customers of that supplier 30 years ago, and they've grown up with them. They've always received special terms and conditions. They may have been allowed to pay on a 40-day basis. There's no reason why the supplier is going to extend those types of conditions to the purchaser. So the purchaser, your client, needs to have made contact with suppliers and negotiated what the pricing is going to be and on the payment terms, and have it in writing. So fiscal management is very important that they understand. Let's look at some of the key documents for someone purchasing a business. I've come across some situations where intellectual property had been developed by the owner, the operator of the business, and he or she had utilized that intellectual property within the business operations, but it was their intention that that was not included in the sales contract, that intellectual property. Now, your client needs to have made inquiries as to whether they are receiving everything that goes with the operations of the business. And hopefully they've ascertained whether there is intellectual property that's been introduced into the business. And then they make sure that in the sales contract that their solicitor produces, or at least reviews, that a condition is that they will have ownership of that intellectual property as part of the deal, or perhaps if that intellectual property is worth a lot of money, that they have access to it at a reasonable price and on reasonable conditions, because they can be caught out if, when they come to start the business, that key aspect of it, that intellectual property, is not there because it's been withdrawn. Does your client understand the business? I found over the years a lot of people just start a business with virtually no knowledge of that industry, having never worked in it previously, and assume that all businesses are the same, and assume that because they had a a senior position in a government organisation or a big business organisation, that they are automatically going to be able to adapt to the life of being a small business operator. Unfortunately, it doesn't always apply. I think they need to go and work in the business for a couple of weeks. They need to be at the business gates or doors probably 20 to 30 minutes before anyone else gets there, so they can observe what the procedure is as the team roll up of a morning. Who opens the door? Who's got the keys? What are the processes? Is there tidying up to be done? Is the footpath need to be swept and cleaned? Do the front windows need to be cleaned before business starts? What is the process for the checking in of stock that's been ordered? This is a due diligence review of the business that we recommend that you undertake with all of your clients in any case, but it should start before someone buys a business, so they become very familiar with the business. In other words, they're not turning up at 9 a.m. for a business that opened at 7 a.m. and they know nothing about what goes on in that 2 hours preceding the doors of the shop being opened or whatever other aspect of the business there is. Is there a requirement for acceptance of late night deliveries? Is there requirements for weekend work? And is your client familiar with all those? Has your client thought about the highs and lows during a year? A lot of businesses are seasonal or run on specific events. In a florist business, Mother's Day is very busy. And if you went and had a look at the business in the lead up to Mother's Day, you would be saying, geez, isn't this a great business? But then go back a couple of weeks later and it's probably a completely different outlook that you would gain. And people need to go into this very much with their eyes open and their ears open. I come across a gentleman years ago who came looking for some advice after he'd bought a business. And when I asked him if he'd been in the business beforehand, he said, oh, yeah, he was there 2 days before Mother's Day. That's why I mentioned it, in the florist business. And they were very busy, had extra casual staff working there. And he asked the vendor, he claims, is how similar is this to what happens the rest of the year? He said, oh, only down a little bit. Now, that wasn't right, of course. And this guy believed them. I asked if he checked the records. And he said, oh, no, there was a suggestion that cash had been taken. So I assumed he was taking cash, so I factored that into the revenue projections. I suspect he found later on that cash wasn't being taken, but it had been implied that it was. Same instances occur at times in hotel transactions. People might infer that there's been cash taken, and in fact there hasn't been. I struck a purchaser once that said, oh, everyone takes cash out of the cash register, so I've always assumed it's there. It was a business that wasn't taking any cash out at all. They couldn't because they had very high loans to pay and they needed all the money. But the purchaser had made an assumption that there was. So you need to be very careful, I think, and diligent in talking to your clients and make sure you're not giving them any reason to make what at times are unfounded assumptions. And obviously, there shouldn't be cash coming out of the business in any case, as we all know the law. So I've talked about key suppliers. One other big issue that's confronting a lot of businesses these days is, where are the suppliers coming from? Where does this business that they're looking at buying get their supplies from? And if those suppliers are coming from various parts internationally, there could be delays in getting supplies. Unfortunately, we have wars being conducted around the world. There's wars in Northern Africa. There's wars a war in the Middle East, in Israel. There's a war in Europe. Now, if your prospect is or client is looking at a prospective business that's reliant on getting supplies out of those markets, have they taken this into account in their financial projections? Because that might mean that the inventory, which might have been traditionally based on 3 months supply being required, has to blow out to 5 or 6 months because of uncertainty as to whether shipments are going to arrive. And does that mean that there should be a reserve strategy developed even before your client has purchased the business, by saying, well, where else could I get those type of supplies in the world? They may cost a little bit more. The shipping might be a little bit more expensive, but perhaps supplies from South America, where there's probably continuity of supplies could be guaranteed, might be a better option for your client to think about, and be factoring in any extra costs into the budget projections that are going to be prepared, or I suggest should be prepared, to determine the amount of money that your client's prepared to pay for the business. Has your client looked at the business systems and operational activities and formulated in a business systems manual? I think it's very important that every business should have a business systems manual. And that's what we've been advocating in ESS BIZTOOLS for many years. So your client should be asking for that manual and sitting down and checking it and doing some spot checking to make sure that the system that's been employed in the business, that the team are using on a day-to-day basis, is a reflection of what's in the manual. Is the manual out of date? Was it written 10 years ago and hasn't been updated? There's been a lot of changes in that 10 years. Is there a debtor systems manual? I think it's a must. And within ESS BIZTOOLS, we've got a debtor systems manual that you can edit to suit the particular requirements of the business and train their team on debtors management. What's the debtors payments policy enforced by the current owners? I've come across situations where the current owners, for reasons best known to themselves, were very lackadaisical about the management of debtors. They were issuing invoices, but sometimes those invoices were not issued until nearly a month after the date they could have been issued. Why? Didn't seem to be any hurry. So out would go the debtor statements, and then customers would literally pay when they felt like it or needed some more supplies. Now, if your client's going to go into this business as the owner and has borrowed money and calculated their budgets and cash flows and have done some cash flow projections, let's say, assuming probably a reasonable debtors days outstanding of around 40 days, and yet because of the lackadaisical system the current owner has engaged in, the debtors currently are sitting up around 70 to 80 days. What will be the customer's reaction? You need to raise that question with your client, because the customer's reaction might be, well, we're very used to supply of our suppliers, our just being prepared to accept payment on an 80-day basis. And if your client comes along then and says, no, I want you to pay on 30 days on the basis he will wear it up to 40 days, and after that he'll put pressure, real pressure on, your client might be going to lose those particular customers. Now, whether they're going to go to some other supplier and be able to get away with paying on an 80-day basis, I don't know. But these situations do exist out there. Why the vendor had allowed that situation to exist, I don't know, but it does happen. So knowing the debtors' days outstanding at present is very important, and not just accepting a verbal, oh, it's whatever you're told. You need to get the documents, get the debtors list, and obviously the profit and loss account, and that will give you the key data that's needed so that you can calculate what the debtors' days outstanding are at present. What level of inventory has been held by the business? I referred to inventory just a little while ago, primarily relating to ingredient type supplies being obtained from overseas, but it could be finished products too, of course. So what level is there? Your client needs to sit down and think about that, because if they've got to increase the inventory levels so that they've got regular supplies to supply to their customers, this is tying up cash flow. Or they are going to be stretching the terms of the suppliers. So if the suppliers are prepared to give them an extra couple of weeks to make payments, that might be all right, but I think it's a good policy to be looking at everything, that payments have got to be made strictly in accordance with the supplier's terms. And most suppliers will want to get paid no later than 30 days, if possible. Now, I know that doesn't happen all the time, but we're giving advice to a purchaser of a business who needs to be closely looking at these types of things. Has your client checked with the Department of Transport, the Railway Department, both state government instrumentalities, and the local council in relation to any major works planned for this location? Some of the major work that those three organisations can undertake can disrupt businesses in a location for 12 months, 2 years, even a bit longer at times, 3 years. What's that do if it's just inconvenient to go visit those businesses? Now, that's bad enough if a business has been operated by, the owner at present for years, and then suddenly it changes. But for a purchaser to go in and purchase a business, and then 2 months later, there's major Department of Transport changes. The main road's been significantly changed, and there's workers out there every day. So there's traffic control, no parking allowed, all sorts of things can happen, can't they? That's really going to affect the turnover of the business, because other than very loyal customers, other people are not going to go to that business. And another very important issue these days is parking arrangements. At this stage, there might not be any parking meters in front of the business premises. And maybe the council's contemplating installing parking meters. That can cause a lot of problems to the flow of customers coming to the business. So you need to make sure your client's going to make inquiries about that. If your client's taking over the lease of a building or buildings, what's the terms and conditions relating to those leases? They need to be closely read. The solicitor should be reading them to determine in particular what are the ongoing requirements for the tenant, which would then be your client, to be paying for. But more importantly, I think, is in what condition have the premises got to be returned at the termination of the lease to the owner? Is this a complete new refit? And if so, what's this going to cost? And when is this refit required? In some shopping centres, there's a condition to undertake a refit every 3 or 4 years. And if you've got your client buying in at 2.5 years, of that lease without any understanding of what the refit is likely to cost that's due in 4 years, only 1.5 years' time. That can be a very difficult financial situation for your client to encounter. So what are the key documents that you should be supplying to your client? Well, I've gone through trying to set the scene for what a client that's contemplating buying a business will be going through and what some of the questions you should be putting to them. But what should you then be saying to your clients? This is the systems that we will introduce for you. Because it's 2025 and businesses need to be better organized than what they have in previous years. The failure rate of small businesses is too high. And today there's no excuse with the technology that's now available and the communications that now available. So a summary of how the business operates. I partly referred to that earlier, but who has authority to undertake various tasks? Who supervises the various locations for the business? I think it's very important that there is a business plan prepared. And it's not just you going into your room and sitting down and writing a business plan. There should be a series of think tank meetings held with your client and preferably some of the team members who are going to remain in the business so your client can get their very valuable input as to how the business operates. But a written business plan is very important, not only to help raise funding for the business, but to create a series of guidelines for how this business is going to operate. Predictive accounting reports prepared based on the business plan. This is budgets for all operations. So if within the business there's 2 retail outlets, a delivery service and an office, well, I suggest to you there's 4 separate budgets to be prepared because there should be 4 separate profit and loss accounts being prepared every month for this business so that there can be accountability clearly determined. If there's a problem, you know where the problem is. Nothing worse than having everything consolidated. And then if there's a problem, it becomes a lot of work to determine where that problem is. And then the key drivers. Now, the key drivers are the sub-accounts, the important ones. We've mentioned a couple of them already. Inventory of raw materials, inventory of completed stock, debtors, creditors, and other activities like capital expenditure that may be going to be undertaken. Research and development, if your client's pursuing a research and development strategy. Perhaps getting ready for export market activities in overseas countries. What's the cost going to be? And then we could go into the cash flow forecast. And that's a very important document because you should be analysing forward 8 months, next year, the year after. What's the forecast going to be on cash availability? Is there likely to be cash flow shortages? Which probably highlight your client is not putting enough money into this business. Do they need to borrow money? And if so, have they got the security for it? Will the business stand the regular repayments of principal and the interest component? And the projected balance sheet. Well, this is a great document, a projected balance sheet. Being able to show your clients what the business should look like in 2 to 3 years in the future. You can be the storyteller. You can line it all up as long as we achieve these key figures in the actual business operations. So we've got these key performance indicators and this level of turnover. You control your costs of these costs. And this should be what the business looks like in 2 to 3 years' time. Summary of how you recommend the business should operate on a daily basis. I think it's very important. There's a brief sort of daily report. Sales yesterday were, gross profit percentage yesterday was. That will mean something to your client, because if they've assumed in their budgets that the gross profit percentage is going to be around 42%, and they get a report that yesterday it was only 30%, someone should be asking questions. Why? How did that happen? There may be a good reason. It may have been a mistake. It could have been fraud. Could have been a lot of things, but it needs to be investigated. This is the management system your clients need. And then the weekly reporting and profitability determination. I think this is probably the most important aspect of the advice you can give your clients, because far too many SMEs are getting into financial difficulties because they are not implementing this very strong financial control every week. So that if there is an issue, like I just explained, gross profit percentage was expected to be 42%, was only 30%, it can be investigated, because there may have been a problem that, if it's not corrected, will continue for the rest of the year. And your client needs to realize this. And in effect, what I'm promoting for you now is that you really promote to your client that you need to be the virtual CFO for this business on a very much a part-time basis, of course. Client probably cannot afford to employ a full-time accountant, but you can offer the services using the technology and the communication facility that we now have. Monthly financial accounts with comparison to budget. Monthly analysis of cash flow forecasts in the future, so that if there's projected to be a shortage of money, because this could have been caused by the need to hold high inventory levels, could be caused because of a lackadaisical attitude by the vendor on debtors, and the difficulty that your client envisages in getting debtors back to, say, a 40-day level instead of currently the 80-day. All these things can have a bearing, but we need to make sure it's been closely evaluated. And an analysis of all these key performance indicators and business metrics, which will mean something to the leadership team. So we now go to the website, and we can just very quickly share that with you so that we can I've now brought up on our website the ESS BIZTOOLS package, and I'm just going to go here now and find buying a business. So this is what you would do if you were wanting to get the documentation. We've got a webinar that we have prepared, download content. So there's a summary of the contents, and sorry, I meant to say that was the recording, but we haven't. We have a procedure control form. Which I brought onto the screen, and it's a guideline. I assume you've had a look at our other material, and each of our packages has got a procedure control form. It is showing links to paper on buying a business, and we're linked to various forms, which we call BAS, Business Advisory Services forms. And this gives you a suggested process that you could undertake with giving advice to someone wanting to buy a business. So hopefully that will assist you in those deliberations. So if we go to the buying a business consultancy, it's it on the screen now. It takes you through the process. It will cover many of the items that I've just referred to as we were working our way through, because I thought we would change our presentation style in this particular webinar. Have a general discussion first, and then you can go through this various material to determine how you're going to advise your client. So that's the overall presentation of the ESS BIZTOOLS material, and we will just go on to the next slide, which is, have you any questions relating to buying a business or any other matter affecting the services that we provide? Please don't hesitate to contact us, peter@essbiztools.com.au, or telephone me on 0418 190 181. Thank you for your support of ESS BIZTOOLS. I look forward to hearing from you. Stay safe. Have a great day. Goodbye. Thank you for joining us on this webinar. Goodbye.